Everyone knows The Big Short. Amateur investors look back in the rearview mirror and claim it was so obvious. They knew it all along. Subprime real estate and the derivatives mess was problematic. This time is different though. The financial system is stronger, more regulated, more stable. We don't use those derivatives anymore. Everything is gonna be just fine, right? You came here for the truth, so let me unveil that for you. That's why you come here. You want to know what's actually going on. You've heard the news before telling you that everything's gonna be okay, but they said that in 2007, and you know exactly what occurred. The derivatives have not gone anywhere. Sure, we don't have the same CDOs as we did previously to that degree. It hasn't expanded the way it did, but of course, there are many new derivatives that exist today. For example, the CLOs, the collateralized loan obligations, have taken the place of the CDOs. When you had all of the financial alchemy creating things out of thin air that took place back up until 2007, 2008, did any of that really change? Of course not. These complex products are used to make profit. They can actually create things that do not exist and they sell them to investors and they make money from it. That's what these so-called banks do. When you hear the word bank, you need to look into it a lot closer. Many people, they hear the word bank, they think their cash in the bank, they get scared, they say bail it out, too big to fail, and so on. But when you look at the operations, at least of what's public, it is very worrisome that they are allowed to go about this business and yet somehow put it onto the backs of the taxpayers when they fail. I want to talk about The Big Short too. I'm going to show you what's going on right now today, and I think it is pretty clear, pretty obvious, something that I've mentioned before. I want to highlight what's happening right now. Today's focus will be specifically with the commercial mortgage-backed securities. You know about the mortgage-backed securities. The Federal Reserve buys mortgage-backed securities, and we saw what happened with that because of the housing crisis, how they expanded these to a new level. Now, a mortgage-backed security, or more specifically a commercial mortgage-backed security, essentially takes the debt that they have on these different properties, they pool them together, and they sell off pieces of those to investors. That's what a derivative is. However, what happens when you have some of these individuals, in the case of a home with their mortgage, or you have a big company like a mall that is starting to go bankrupt, they can't pay their bills. Well, of course, the defaults start to rise and the actual investment itself begins to rot. The value of these so-called investments declines, and then you've got major problems. You have insurance problems, of course, as you saw throughout the housing crisis. One company is making bets on others, and all of the madness that goes on in the financial system that most people aren't aware of is starting to come up again, but this time on the commercial side. I'll show you two quick examples before we move into the actual trade itself. WeWork's woes cause mortgage-backed bonds to tumble. Office providers move to skip rent payments and renegotiate leases knocks the CMBS market. This is just one example, but of course right now, because everything's closed, we've got serious problems specifically related to the CMBS. Struggling South Florida retail market faces $6 billion in CMBS payments. South Florida's hotel industry also faces $4 billion in CMBS debt. There are so many examples like this, of course, and you can look into it for yourself, but I'm just showing you these to give you some insight as to what's happening right here in 2020. I'm sure this is going to get worse over the next few weeks, next couple months. You're going to see an escalating problem that might have to be resolved by printing a whole bunch of money and bailing them all out, or we start to see some failures. This right here is the popular one, CMBX Series 6 Triple B. When you look at what's been happening, clearly it's not so good. This has been a problem for the last little while. You could see that this started to decline back 2015 around there, and then it started a resurgence up throughout 2019 when more money was flowing in. But once we got to 2020, just like everything else, it fell off a cliff. This has been a very serious problem, and there have been many prominent individuals that have been pointing to this, saying the commercial mortgage-backed securities are extremely dangerous, and this is the one to short. I'm not making that recommendation for anybody. I'm not saying that myself. I'm just pointing to the facts as we see it. When you look at the different companies out there that are hurting, the retail industry is getting destroyed right now, and that's not a very good thing because it's compounding all of the other problems that we're seeing throughout 2020. It doesn't look like this is going to stop anytime soon. Right now, this is at a record low. So we've got billions of dollars that is potentially not going to be paid back. And what do you think that does to these particular investments? It's going to hurt them. Now, is this a widespread issue going on? Is this the entire market all at once? No, but look at what happened with the subprime back in 2007 leading up to 2007. You had major issues in this one small little thing, right? Just subprime, don't worry about it. But then suddenly it started to make its way into the prime market. It started to affect everything else because of derivatives. Derivatives are the big problem here, and people don't understand them, and I see it all the time. I had done that video related to Canada and how this all works, trying to explain it, trying to make sense of it. My subscribers, obviously, they understood it, but as the days went on, people that normally don't see my videos started watching it, and they were downvoting the heck out of this thing because they don't understand. The ignorance, of course, is what made the problems of 2007 become the Great Recession of 2008 and 9. I just don't understand how the Federal Reserve can successfully bail out anything and everything without a major destruction occurring to the value of your currency. So let's go into a little bit more depth here. This is an article out of the Financial Times. Wall Street's big short against US retail has inflicted painful paper losses on AllianceBernstein, a mutual fund house on the other side of the trade, which has insured debts owed by shopping malls that face disruption or closure. So they actually came out with a report, I'll show you in a second, that explains why there's nothing to worry about, and it's actually quite interesting. But let's move on right here. More than 24 funds managed by AllianceBernstein have sold about $4 billion worth of protection against mortgages owed by American shopping centers and other commercial borrowers. You know they're going to deal with some serious issues coming up. There's no way to put it otherwise. Retail skeptics, including the veteran investor Carl Icahn, have wagered that mall owners will be unable to meet their debts. And I happen to agree with that just based on what we're seeing now. Mathematically, it just doesn't make sense how they can. So that's the most likely outcome. But then again, miracles do happen. The derivatives bet is based on the so-called CMBX 6 index of mortgage-backed securities, which has a large exposure to retail. You get into more of the details, but essentially they're expecting more pain. And why? Because the businesses are closed, because these businesses cannot pay their rent, because of the problems that we are going to encounter over the next few weeks, the next few months. It cannot be resolved. And once we get down to the floor, wherever that is, even if it does come up, it won't be back up to the level it was previously. Certain things like retail are not going to be able to climb back up to those heights, even though they were already down from what we had seen previously. So AllianceBernstein had to really go into panic mode, of course, and they decided to create this report, the real story behind the CMBX.6 debunking the next big short. They created a 55-page document telling you why, don't worry, you're going to be okay. Essentially saying that the malls, they're not going to go away. They're just being repurposed. And surely we've seen that, definitely, there's no doubt about it. But quite frankly, there's just too much of it. There's way too much of it, and that is a big problem. As I've mentioned many times before, it's not just the mall. When you have the anchor store that leaves, many of the other stores start to leave, and then there's businesses that surround this area that are going to suffer as well. Everything is interconnected. We must remember that. People are simply delusional as to what's going on today, and one of the very good examples are pension funds. Take a look at this. Record losses. Median returns for public pensions were the lowest in about 40 years, narrowly beating out 2008 as the worst quarter ever. Worst quarter ever. And that right there is just a small taste of what could possibly happen. The Federal Reserve swooped in. The fiscal policies that were implemented were historic and still going on today. How are they able to resolve this if we get another leg down? Okay, I'm going to end the video there. If you found it informative, please give me a thumbs up. I want to say thank you to each and every one of you for all of your support. When you watch the advertisements, when you give thumbs up, when you comment, all of that helps me. I really want to say those are all appreciated. When I go through the comments, which I do multiple times a day, every day, I'm looking at all of the positivity, and I just want to say thank you for that. It really does help me to keep going. If you want to check me out on Instagram and Twitter, you can do so at The Money GPS. If you want to learn how to sell online, e-commerce is clearly expanding right now, especially. I would highly recommend checking out my course because it's free. You're not going to have to spend anything to learn. Right now is the time when you need to be learning new skills. You can check it out at the amazongps.com. The financial system is complex, it's convoluted, and it's like that on purpose. If you want to understand it from top to bottom without any jargon, you can definitely get what you need to know in these two books. The link is in the description if you want the audiobook, themoneygps.com. Have you seen this video yet? If not, I would highly recommend checking it out. You can click on it and I will see you there.